Good morning, ladies and gentlemen, and welcome to the BLUEROCK Diamonds PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you when they're ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, we'd like to submit the following poll. I would now like to hand you over to Mike Houston, Chairman, and David Facey, CFO of BLUEROCK Diamonds PLC. Good morning.
Good morning, and welcome to those listening in. Thank you very much for your time. I'd like to just give a little bit of background information on me in case there's some people who don't have a history with BLUEROCK. BLUEROCK has one investment at this stage. It's a diamond mine in the Kimberley area, Careerflay. This diamond operation has 5 pipes, a resource that we've recently upgraded of 10 million tons and 500,000 carats at 5 carats per 100 tons. The mining to date has demonstrated a very high quality diamond, which puts us in the top 10 in terms of price per carat. And that obviously, together with the resource, which would give us approximately a 10-year life, makes it a very attractive asset. I joined BLUEROCK Diamonds in late 2018. Went out, had a look at the operation, saw the potential, but realized pretty early on that we needed to make some key changes. We needed a stronger technical team on the ground, and we appointed a CEO in April 2019, a mining engineer. We needed to stabilize the operations, which he started doing immediately, and we were able to move the production. If we could just go to slide 2, because I think this leads into that, if you wouldn't mind. We stabilized the operation, and we moved the tonnage up from 2018 of 180 to 300,000 tons in 2019. And in 2019, we, from a strategic perspective, we realized it was critical to get the economies of scale right. And looking at the resource and what we felt it could sustain, we felt somewhere between sort of 800,000 tons and 1 million tons here processed. 40 to 45,000 carats was achievable. And we started progressing a project along those lines. At that point in time, we had early 2020. We had the impact of COVID. 50 days lost in April/May, and I think importantly, and David will touch on this a bit later, a drop in price of around about $100 a carat from pre-COVID to the COVID period of 2020. And we, during that period of shutdown at 50, we had to re-look at our project and decided to move it up from plus minus 750,000 tons a year to 1 million. Required a bit more design on the plant and so on. And we decided to push the button on that project in July 2020. And it really brings us to the situation where we are now. We clearly were hoping to have a lot of the project done by December 2020. We haven't achieved that, and we'll touch on it in detail. But I mean, fundamentally, the impact of COVID, unbelievably high weather issues later in the year, and as a management team, we need to take responsibility as well for some of that delay, because I think in retrospect, this project was which we'd hoped we could do internally ended up being bigger than we thought, and in retrospect, I think we probably should have brought in a stronger project team earlier in the process. We'd now like to move on in the presentation, but just prior to that, we'll just show a short video.
Thank you, Mike. Back with you.
Okay. If I could just briefly, touch on slide 2, if I may. I did cover some of this in my opening, but I think what's important, I think, from looking at the period, from 2019 through to where we are now, increase in tonnage and carats, and the recent resource announcement, which very, very key in terms of our longer term planning. One can see there, with the resources, tons up 49%, the carats up 53 to 516,000 carats. And importantly, we've been able to upgrade our resource from inferred to indicate almost 20% of it. And that's basically linked to the competent person looking at what we've mined to date and being comfortable to take a depth below that mining and upgrade it. So that should be a constant annual upgrade, but obviously provides one with more confidence in the consistency of the grade and the carats that we should produce. I'd like to just pass you on to David to just take you through the reasons for the recent funding. Thank you.
Thanks, Mike. I would just say on those 2 videos, they were both taken this morning by Gus, who's our operations director, who was out at the mine today, and hopefully gives you an impression of the achievements we've made to date. Set out on this slide, we have the 3 main reasons as to why we raised more money last week. And I think they all link in together, really. The main one is the exceptional rainfall that we had in December and January. And as you can see from the graph, December and January are usually not too bad in terms of rainfall, but we had 5 times as much as we expected, leading to 29 days downtime when we had forecast about 5 days, and that cost us, in terms of revenue, approaching $500,000. It also had an impact upon the ability to complete the crushing end of the plant, which is now complete and running, as you saw in the video. So we had originally planned for that to be up and running by the end of the year. That was delayed and was in operation by the end of February. That had a knock-on effect in terms of our ability to deal with the wet weather, because the new crushing plant is designed to withstand processing wet material much better than our existing plant. So that again, we estimate cost us around about $500,000. And the third impact, which was COVID related, and really impacted by the fact that in South Africa and worldwide, really, the tender system just stopped working last year. So we were selling our diamonds to individuals who were picking up whole parcels, when in fact in general they probably only wanted a sort of section of our overall parcel. Where ordinarily we put them into tender and we get 80 people bidding on various parcels, not all of them, some were aiming for the higher value stones, some for the lower value stones. But we suffered by the lack of market competitive tension in the last quarter. And the last quarter we achieved around about $270 a carat, which was roughly $60 less than we would hope. The good news is that since the tenders have reopened this year, we've had 2 tenders, and our average price for those 2 tenders has been over $420. So back to levels that we were seeing in 2019 before the impact of COVID-19. So in total, our estimate is that these 3 issues combined cost us around about $1.5 million, and has had a delay to us completing the project. Just some pictures here showing you just quite how bad the rain was. The one on the top right is the road that goes past our mine. Lorries weren't able to bypass. The iron ore plants were shut. I mean, in general, it caused a lot of chaos for the mining industry in the Northern Cape at the end of December and January this year. This is the new timetable for when we expect to complete the expansion project. So, as I said, the front half of the new project, the crushing circuit, is now done and is running and is feeding the back end of our ore plant. And we're already seeing improvements in production levels as a result. We are working very hard on getting the wet side of the plant complete. We have engaged with a project management specialist in order to assist us in this process, and we hope to have the plant complete by the end of April and fully operational by the end of May. The next step of our expansion plan is to connect to the national grid. This is important because the cost of power from the national grid is roughly a third of what it costs us to run on the diesel generators we have at the moment. We're not expecting it to be running 100% of the time because of the brownouts that we experience. But even based on a 75% uptime of the national grid, we make a large saving, and we'll come on to where we expect the costs to be later. Then in September, we're looking at putting in the recrushing circuit, which will liberate some finer diamonds, which have not been liberated by the current crushing circuit, which will increase the grade, although it may have a slight impact upon the value per carat, as they're likely to be on average smaller than our usual run of mine. So at the back end of last year, we were running at around about $273 per carat in terms of cost. Quarter 3 was actually just above $250, which is where we expected to be by the end of the year. The quarter 4 was higher because of lower volumes because of the rain, and because of increased costs as we were gearing up to be operating at a much higher level in the new year. Half 2 is also impacted by a slightly lower grade than we had been expecting at 4.37. So all in all, I think we are confident that our cost per carat is moving in the right direction, and we expect it to be down to 220 by the time we have got the new plant fully operational. The next step is to move to the national grid, which we again expect to increase costs further by approximately another $20 per carat, bringing down the overall cost per carat to 200. And this is compared with, in terms of our revenue, our guidance of around 350, and what we achieved in 2019 of 415. Mike, can I hand back to you to go through the marketing?
Thank you, David. This slide really just gives a sort of broad view on how the market's been seen at the moment. BLUEROCK clearly is not we're a very small player in terms of the total market, and our product, which is mainly in the higher quality end, generally it does, is not influenced greatly by the bigger players' activities. But I thought it was important just to give shareholders a sense. I mean, quarter one has taken off on a very positive basis. We saw price increases by De Beers, in 2 price increases in January and February. And the general view is until the rough and the back end of the market, the retail circuit moves into equilibrium, this situation will remain. So on the South African side, as David mentioned, the 2 tenders we've participated in, has been a strong demand. 2 things: the market, clearly the global market, and then in South Africa, the rains have impacted pretty severely on a lot of the alluvial mining, and so there's been a general shortage of supply. And just to reiterate, we've had 2 sales and averaging over 400. That includes one high-value diamond in that process. But it brings us sort of into the 2019 type numbers that I think 2019 we averaged just on 420. In the retail side, the jewelry sales in the USA and Asia were very strong through the period, November to January, going into the Chinese New Year. And a number of retailers reporting record sales in the November-December period in America. The Indian diamond sector do a lot of the cutting and polishing and adding value. What we're hearing there is that the manufacturing side, that aspect is back to around about 70 to 80% of capacity, but at close to full capacity for the higher quality, bigger stones. Very difficult, appreciate to forecast the short to mid-term outlook. Much will depend on the end consumer and the use of disposable income. There is a view that with people locked up in a lot of places, or locked down in a lot of places, that may lean towards purchasing items of jewelry, etc., and support the diamond industry. But I think the whole impact of COVID and how quickly economies open up will be the major driver to ensure that the market's in balance. We're obviously very encouraged by the success of the vaccination program in a number of the bigger economies. As I mentioned earlier, I think BLUEROCK, with its high quality diamonds, 90% gem, remains well positioned to sell its product and hold prices. We did talk last year about moving our sales to Antwerp, but we found it very difficult in 2020 with lower production than anticipated to participate in these tenders, which require a minimum volume. But we remain committed to do that, and we'll be looking at it again in the second half of the year when we're up at the predicted higher volumes. We like the model of mine to market, where your total production is viewed by a large number of buyers, from your best diamond down to the less valuable. It sort of has from what we understand, it has a very positive impact with buyers, and obviously from a governance perspective and so on and so forth, it's very encouraging. If you could just move to the next slide, please. This is the production and sales guidance for 2021. And we've just shown the movement, which we've mentioned earlier in the presentation, from 2019 building up to the 2020. Despite the 50 days lost, we still were able to move up to 400,000 tons in 2020 and 16,000 carats of sales. As far as 2021 is concerned, the first half of the year is clearly getting the project up to its full production, and then running at full capacity. And so we've kept our bottom end of 850. We've reduced the top end slightly from forecasts that we gave a few months ago, and our carats, 34 to 44,000, are still double what we produced in 2020. The grade is what we would expect from those two pipes that we're mining from in the main pit. We have put a value per carat in there of 330 to 350. That we would hope to attain. It's a sort of what we would call our run of mine price, excluding the large high value diamonds, which obviously come on the they're not guaranteed every month, but we do anticipate that we will get our share of them. So this is a run of mine where a lot of our value comes from the 1 carat up to around about 7 carat high quality stones. Just move to the next slide, if I may. We have put a slide in just covering our environmental, social, and governance aspects, and there's some detail there. I think an important part of this is that in terms of the South African regulations, you are also required to have there's an empowerment policy there, which we will be moving across to. We have been participating one. It's increased slightly, but it results in BLUEROCK having a 70% interest, a commercial indigenous partner in South Africa 20%. We have that partner, and then the community and the employees 5% each. And clearly they over and above that, we would have a strong community program to ensure that the people in the area in which we operate are benefit from the mining operations. Just move on to the investment case. Just really a reminder, I suppose, of what we see. I mean, this is a quality asset. We've got in excess of 500,000 carats and a 10-year life of mine, which we believe will increase when we do some more evaluation work of KV3, which is the biggest pipe we have. It's double the size of our current main pit, but we've only brought 40% of that resource into our overall resource statement at the moment. So we will be doing some work second half of this year, early next year, to prove up the other part of the other 60%, and we're very confident that a material amount of that material could come across into our resource statement. And I think on the future growth and expertise, we are demonstrating with this project our ability to take an asset and grow it. Unfortunately, delayed a bit by the 2020 year that we've had to face up to. But taking this project through from under 200,000 to 1 million tons, I think demonstrates the technical capacity. And we'd like to believe that our board, together with the team that we've got, has a lot of African mining experience, and that in the future, if projects are put to us, we have the capacity to take them on and turn them into for good shareholder value. I think on the revenue generative, we've touched on what we're trying to do from a cost perspective. From a pricing perspective, if you look at 2019 as a normal year, you're in the $400 carat mark, and costs of around about $200 at once we're at full capacity gives a very healthy margin. And even if pricing falls off in downturn periods, the company's well placed, and that was key to us getting the economies of scale right for this business, is being able to deal with the downturns as well as the better priced periods. We work hard on the whole environmental, making sure that we abide by the standards that are set in Southern Africa, and and working with our community, as I mentioned earlier. And I think BLUEROCK's well positioned. It's had a few issues recently, some of them under our control and some of them out of our control, but I think it's very well positioned going forward with this new project and material increase in its revenue flows. That concludes our presentation, and we have had a few questions, so I think we can proceed to those.
That's great. Mike, David, thank you very much for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company do take a few moments to review those investor questions submitted already, I'd like to remind you that recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company. And immediately after the presentation is ended, you'll be redirected to the opportunity to provide your feedback in order that the company can better understand your views and expectations. Mike, David, before we just go on to the questions submitted during the event itself, we had a couple of pre-submitted questions from investors, and perhaps I could start off the Q&A session with these. The first question reads as follows: when do you anticipate connecting to the grid, and when do you expect the new plant will be 100% operational? I know something we did touch on in the presentation, but if we could add anything there, that'd be great.
Yeah, I mean, David did cover that, but I mean, just to say that we're looking to try and commence that April/May. I think it's critical that the weather, not that there's going to be bad weather at that time, but the very difficult weather conditions we've had, that you've got to make sure that the ground conditions are ideal for this power line to be put in. So we'd anticipate starting in that time, and we understand from the tenders that went out, it's a 90 to 120 day timeline. So right at the moment, because that tender was done some time ago, we're revisiting it and just making sure that we've got the latest numbers and the timing, availability, etc. The new plant forecast timing, again, we've touched on it in the presentation, but as David said, we're looking at it being built by the end of April. And then you have a wet-hot commissioning period during the month of May, and then a build-up. The way I put it, a build-up to full production. As we're running typically at around about 40,000 tonnes a month, and you're going to be moving up to 85,000-90,000 tonnes a month, and we'd see that happening in late May through June, and then be running at full production in the second half of the year. Just a reminder, I think, which is important for shareholders, that the new crushing circuit, which is now operational, and that plant is providing a crushed material, which was our vulnerable area in the past, to the back end of the old plant. So we continue to operate, and we therefore anticipate that we'll produce a sensible tonnage through this transition period to the new plant, and that will ensure that we get continued cash flows from that sort of period, March to May, towards the end of May, when the new plant will be fully operational.
Thank you, Mike. The next question we have here is: in view of the worldwide change in weather conditions, what is the company's forecast for the expected downtime over the next 6 months?
Yeah, this is obviously pretty difficult to answer, but just as a general comment, I mean, our mine Careerflow is in what would normally be deemed a low rainfall area, and that's been our experience, apart from the last 2 years, where we've had extreme rainfall. Last year we had what was deemed a 30-year high, and now this year we've had a step up from that, particularly in December and January, although February, which is normally the wettest month, has gone back to relatively normal levels, and we're seeing March at normal type levels. So this clearly was an exceptional December, January. In our planning, what we do is we assume that from mid-December through to mid-April, we build in a availability and utilization discount based on historical information that we have, for days that we would lose directly to heavy rains where you can't operate for safety reasons, and also for some delays that you get because the material gets so wet that it's difficult to handle. So we do build in that into the availability utilization. So our first quarter is always much lower than the rest of the year, and then but that's all built into our prediction of 1 million tons. As far as the question of what are we expecting in the next 6 months, well, we're moving towards the back end of the rains now, around middle of March, going into April, and so we would, I guess, in March we might March going through April, we might not have another, difficult to say, but another 5 to 10 days where you might have disruptions. But the new crushing circuit and its ability to, and it's given us an ability to stockpile -18 material, which clearly we can handle in wet weather in the back of the plant, should alleviate that quite considerably. And it's also part of our bigger plan when we move 100% to this new operation. I hope that gives you some idea of on that question.
That's fantastic, Mike. Thank you very much indeed. Mike, David, we have had a number of questions submitted during the meeting itself. If I could perhaps just hand back to you, if you could just click on that Q&A tab on the top of your screen there, you can just see the questions. If I could perhaps ask you to read out the question, even who it's from, and just give your responses where appropriate to do so, that'd be great. Thank you.
It's from my perspective, I've lost the screen. So David, you might, if you've still got it up.
Yeah, I have. So, the first few questions are from John M. The first one is, are those 10-meter benches, and will we bring in bigger machines? Mike, they are 10-meter benches, but Mike, in relation to the bigger machines?
I think at this stage, for the tonnage, we've just had a second fleet come in from our open cast mining team. I think it's a similar sized machine. A lot of it's linked to the size of the pit and the depth. And so at the moment, they've done their optimization on that basis. And so later on, possibly when KV3 is operating and we're going deeper on the main pit, then they might look at different machines. But right at the minute, they might look at different machines. But right at the minute, they might look at different machines. But right at the minute, they might look at different machines.
Yeah, I think Mike's having some technical difficulties.
David, would you mind just carrying on with some of the questions, or just clear Mike's audio? That'd be great. Thank you.
Yeah, sure. So John continues to ask, can you see specific phases in the kimberlite? Yes, we can, and we track those as we mine, and we factor that into our forecasts. Water flowing to the pit, yeah, that's a problem all year round actually because of the water table, but we pump it out. I think there was a picture of our flooded pit earlier. Yeah, and that does cause a problem. And again, we need to use heavy duty pumps to remove it. John's next question is, do you still think you'll get better prices for your stones in Antwerp now? Are local prices matching international levels? This is always quite difficult to judge. The general expectation is that one gets 10 to 15% higher prices in Antwerp, but there are associated costs with export. So hard to give a definitive answer to that, but yes, the expectation is that we would get net revenue increase of between 5 and 10%. The downside of that is that in order to achieve the best in Antwerp, we need to have parcels of 5,000 to 6,000 carats, as advised by our partner Bonas, and therefore there will be a cash carrying cost of that until our production is up and running at the 100,000 ton mark, as we may only be able to do tenders once every 2 months rather than once a month. Next question is, are these costs cash costs or AISC? These are all-in costs in South Africa, so including admin and overheads. So what it doesn't include is the UK overhead, which is running at £500,000 or £600,000 on top of that. What colour stones fetch the best prices per carat? We only produced white stones so far. We've had one or two which we thought might have been coloured, but in fact turned out not to be. So we're only concentrating on the white stone market. Mike might have a better idea of what colour stones are our highest prices, but I think the pink ones in particular do well. Are Asian buyers paying much more for your yellow stones? We don't have any yet, so difficult to answer. What will be our estimated guidance for 2022? Well, 2022 is going to be our first full year of, we expect to be our first full year of 1 million tonnes. So at 4 to 4.6 grade, that would be 40,000 to 46,000 carats. Pit grade is 5. Overall pit grade for 1 and 2 is 5. We would hope that prices remain at the prices we have achieved in the first 2 months of the year, but the guidance for 2021 of 330 to 350 is our sort of bottom end of what we would expect. And Robin M has asked, so quite a long question. Robin's question is about cash being tight and limited capital expenditure, and are we investing in spare parts, etc., to make sure that we can meet the production targets? I think the answer to that is, in the past we have had very limited cash to operate a proper spare parts inventory. We are certainly now working with, made worse by the fact that the plant was second-hand when the company acquired it back in 2013, and has been sort of run on a sort of make do and mend approach. The new plant is largely new, and we are putting in place proper procedures for having sufficient spares on site and a proper stock into inventory to ensure that downtime is minimized.
David, thank you very much. I think you have addressed pretty much all those questions that we have come through there. Unfortunately, Mike looks like he's having a localized issue with his connectivity. So may I just ask you just for a few final words, David, just to wrap up before we redirect investors to give you some feedback?
Yeah, actually, just one more point on Robin's question. Actually, the area where we have had most breakdowns in the past has been in the crushing circuit, particularly with our cone crushers. We have built the new crushing circuit to have much greater capacity than we need, and in fact we're running with 3 cone crushers going forward. So we have built in a whole level of extra redundancy in terms of our capacity to ensure that if we do have breakdowns, then we will still be able to operate at the levels that we need to do.
Fantastic. Thank you, David. And perhaps just a final couple of closing remarks for you before I redirect investors for feedback. That'll be great. Thank you.
Sure. Well, thank you everybody for listening. I hope the video has given you an idea of where we got to today. I think it's always useful to give you a view of things operating, and that it is indeed a real and operating plant. I mean, if we'd shown you videos of this 2 years ago, it would have looked completely different, particularly in terms of the how the mine looks. Now the mine is operating as it ought, with the proper benches and the proper road networks to enable us to mine it in a systematic fashion. And I think that is it.
David, thank you very much. Let's say thank you as well to Mike, and unfortunately we just lost him for connectivity at the end there. But look, thank you both very much for updating investors, obviously bringing the video in. It's great to see the operation. Please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear in front of you. If you've accessed via the link sent to you in the email, you'll simply be asked just to log in and submit your feedback. It takes just a few minutes and be greatly appreciated by the company. So please do take the time to do so. On behalf of the management of BLUEROCK Diamonds PLC, thank you very much for attending today's presentation. That concludes today's event. Thank you. Good morning.